All right, today we're going to dive into a financial tool you've probably heard about but maybe never really dug into, life settlements. So, what if you could take that old life insurance policy you don't really need anymore and turn it into a chunk of cash right now? Let's break down exactly how that works.
So let's kick things off with a question that it might just hit a little close to home for some of you. Think back to when you first bought your life insurance policy. You probably did it for all the right reasons, right? But fast forward to today, when you see that premium payment come out every month or every year, do you ever stop and think, wait a minute, is this thing still helping me or has it actually become a financial burden?
And you know what? That feeling is surprisingly common. A life insurance policy is kind of like a suit you bought for a specific occasion. It was a perfect fit back then, but your life changes, right? And that financial safety net that made so much sense years ago, it just might not fit the person you are today. So let's get into some of the reasons why that happens.
What's really interesting is that a policy often becomes outdated for really good reasons. I mean, maybe you paid off the mortgage. That's huge. Congratulations. Or your kids are grown up. They're on their own and they're doing great. Maybe that business you are protecting, well, you sold it. Of course, there's the other side of the coin. Sometimes the premiums just get to be too much to handle. But whatever the reason is for you, the whole point is to make sure your finances are working for your life today, not the life you had 20 years ago. So what do? Most people think there are really only two choices here. Option one, just let the policy lapse. You stop paying and you lose everything you put into it. Ouch. Option two, you surrender it back to the insurance company and get whatever little cash value it might have. But what if I told you there's a third option? One that most people don't even know about, that could potentially unlock a lot more value.
And that option is what we call a life settlement. The whole idea is actually pretty simple. You're selling your life insurance policy to a third party. In exchange, they give you a cash payout, a lump sum that is almost always more than what you'd get from the insurance company's surrender value. For the buyer, they're looking at it as a long-term investment.
Okay, look at this chart because this really lays it all out, plain and simple. If you let the policy lapse, you get zero, nothing. All that money you paid in is gone. If you surrender it, yeah, you might get a little bit back, the cash surrender value, which is usually pretty low. But with a settlement, the goal is to get the policy's fair market value. The takeaway here is huge. If you don't at least look into this third option, you could be leaving a serious amount of money on the table.
Now, this next point is absolutely crucial, so let's be crystal clear. Once you sell the policy, that's it. The deal is done. The buyer, they take over paying all the future premiums. And, this is the big one, they also become the new beneficiary. That means they are the ones who will receive the death benefit down the road. It's a clean break, which is exactly why you have to be 100% sure that your family no longer needs that original death benefit. So you're probably thinking, okay, this sounds interesting, but it must be a super complicated process, right? Well, actually, it's a lot more straightforward than you'd think. The whole industry is regulated, and there's a very clear step-by-step process. So let's just walk through it together, from that first phone call all the way to getting paid.
Okay, so first things first, there's an initial review just to see if your policy is a good fit. If it is, then it's a matter of gathering up your policy documents and doing a quick health review. All of that info gets packaged up and shown to licensed buyers, who then compete and make offers on your policy. And here's the most important part. You are in the driver's seat the entire time. You get to look at the offers, you can negotiate, or you can just say no thanks and walk away anytime before you sign on the dotted line. So how long does all this take? Well, in a best-case scenario, if all your paperwork is neat and tidy, it could be done in as little as 30 days. On average, you're probably looking at about 60 days. Now, if your case is a little more complicated, maybe there's a policy loan or it's owned by a trust, it could stretch to 90 days or more. Really, the one thing you can do to speed things up is to have all your documents ready to go. All right, this brings us to the million-dollar question, right? Who actually qualifies for one of these? The easiest way to understand this is to try and think like one of the buyers for a second. They're making a financial investment, so they have to look really carefully at the numbers and the economics behind every single policy. Okay, so generally speaking, buyers are typically looking for people who are 65 or older. The type of policy is also a huge factor. They're mostly interested in permanent policies, things like whole life or universal life. Now, what about term policies? Usually they don't qualify, unless there's a special feature that lets you convert it to a permanent policy. And then there's this really interesting kind of counterintuitive point about health. If your health has changed significantly for the worse, that can actually increase the value of your settlement. Why? Because the buyer figures they'll be paying premiums for a shorter amount of time. And here's a big number to keep in your head, $100,000. That's usually the minimum face amount, the death benefit, that's going to get buyers interested. And it makes sense, right? If your policy's worth more, it tends to attract more buyers, which means more competition, and that can lead to a better offer for you. Okay, it is so important to be clear about this. A life settlement is not a magic bullet. It's not the right move for everybody. So before you even think about making a decision, you really need to sit down and weigh the pros, the cons, and, just as importantly, the other alternatives you have. Let's really look at the whole picture here. This table really breaks it all down for us. Let's start with the pros, the upside. It's pretty obvious, right? You get a big chunk of cash right away. You stop making those premium payments, which is a huge relief, and you almost always get way more than the tiny surrender value. But let's look at the cons, because they're serious. Your beneficiaries, they won't get the death benefit. The money you receive might be taxable, and not every policy even gets an offer. And hey, don't forget you have other options. You could just keep the policy or maybe reduce the death benefit to make the premiums cheaper. I think this quote just says it all perfectly. The win is not the settlement itself. It's choosing the option that produces the best outcome for your household. See, the real victory here isn't just selling your policy. The win is taking the time to look at all your choices and picking the one that makes the most sense for you and your family, right here, right now. So we're going to leave you with one final, and I think pretty powerful question to think about. I want you to go take a look at your own life insurance policy and really ask yourself this. Is this policy serving my life today, or is it just a financial leftover from my past? Because answering that one question, honestly, might just open up a world of financial freedom you never even knew was there.